Hello, guys. Today we're going to be going over how to analyze and how to read an income statement. So, as an investor, you should always be able to understand to have some kind of skills of reading an income statement, balance sheet, and the cash flow because all companies do report them and it is important to understand what they mean. So, today we're going to be going over Microsoft's income statement. Microsoft is an amazing company, they've been around for a long time, so they have a really good, neat income statement. So for where to read an income statement, Yahoo is the most popular and I believe what everybody uses. But sometimes the numbers on Yahoo won't be very accurate. So it's important to go to the website. How do you find the actual earnings and released by the company? You go on the website. If you scroll all the way down, you'll always find a section where it says investors or investor relations. So if you go here, Microsoft has a really easy website to navigate. So right here we can see the earnings. If you click in here, it'll give us a little press release. So what is a press release? It's kind of a summary of the quarterly the results. And right here, we can see they highlight the main points: the revenue, the operating income, and the net income. So to see the full thing, we can scroll around. It'll be different for every company since they have different websites. We can see right here financial statements, and boom, it brings us right over here to what we need to see. So we can see for this company, the numbers will be exactly the same as Yahoo Finance, which is what we want to see. So let's go over down and explain what everything means. So the main thing is revenue, or the first thing is revenue. So when looking at companies, we want to see consistent growth, and we can see that Microsoft has been growing their revenue consistently, and going through the company directly gives us more data than going on Yahoo. So right here, we can see it gives us breakdown. For example, for revenue, it gives us the product revenue and the service and other revenue. So we can see that they both have been growing, product a little bit less. And then we can see that the cost of revenue, so revenue is all the money they've made before the expenses. So, and then right here, we can see the cost of revenue. And we can see again the cost of revenue for each one. So we can see that the cost of revenue for service and other has been going up, and so has the revenue for them been going up. And then we can see the gross margin. So Microsoft does have a really nice gross margin. We can see that they have $245 billion in revenue and $171 billion in gross margin. So if you look at different companies and different industries, this will vary. And since this is a technology company, a tech company, they do tend to have much better gross margins and be much more profitable since they need less employees and they're not a service company. They sell online services. I hope that makes sense. So the gross margin we can see right here, but then if you want to see the actual percentage of how much percent the gross margin is, we can bring out our handy calculator and we can take right here, we can take the cost of revenue. We can take the gross margin of 171 billion. Boom. And if we divide that by the total revenue, 245 billion, we'll get this number. If we times it by 100, boom, we get the gross margin as a percentage. So 69%, which is pretty neat. And again, if you don't want to do the dirty work and go through your calculator, you can use other services. So for example, if you go on Stock Unlock and if you go on their free form, which is a very neat tool, all we have to do is type in the gross margin. So gross margin is already typed in. So we can see right here that the gross margin is the purple one, 68%. And we can see how they've been growing. So they have grown from a 64% gross margin all the way up to almost a 70% gross margins. And again, we can click around from quarterly to yearly. And it's important to take a look as far back as possible so you can see, has the company consistently been growing, or is it just going up and down? Okay, so that is the cost of revenue, which gives us the gross margin. And then we can see again, what other things are going on here? Where are they spending the money? Research and development. It has been going up, so they have been doing more research and development. It's pretty self-explanatory. And again, sales and marketing. They have been a little bit more. The cost of sales and marketing has been going a little bit up, $24 billion, and the revenue has been going up. So we want to make sure that what they put the money into is actually working. So we can see as the sales and marketing is growing, so is the revenue. General and administrative expenses. So this would be the paying the employees and things like that, just the general expenses of running the company, which has been going up, which is normal for a company. It will go up. And then here we can see the operating income. So the operating income is the income. If you just take the gross margin and we take out all these expenses, we are left with $109 billion. And then right here, we have other income. So again, you could as well get a margin by doing the same thing, taking this number, dividing it by the total revenue, and then timesing it by 100, and you will get a percentage. Or you can go to Stock Unlock and just type it in right here, and it'll pop up. So what's next? The net income, which is a very, very important one. And okay, so what is the net income? Net income is just taking out all the other expenses there is, such as tax right here. So we can see that they paid $19 billion in tax after the operating income, and they're left with $88 billion in net income. So net income is after all the expenses. So a lot of companies will have a very good gross margin, but not a very good net margin. So to give you guys an example, we can look at HIMS. HIMS is a fantastic company, and we can see right here that they have an 82% gross margin. So they are very profitable, and the cost of revenue is very low compared to the actual revenue. So they are making money. But if you look down here at the total income, net income, we can see that it is only $9 billion. So what does that make sense? Is because after the gross profit, what they did with their money is we can see they invested half of the revenue into sales and marketing. So for a growth stock like HIMS, which is trying to get as much revenue as possible, it makes sense. And we can see right here that the revenue has been growing substantially, which means the sales and marketing has been working. So that is the net income. And then right here, we can see the earnings per share. So they're making $11 per share, and the diluted is still $11. What does this mean? It means they don't have a lot of outstanding shares that are diluted. So diluting the company shares is a very common thing that companies do, especially companies with low cash. Because to get money, you can either raise loans or all types of lines of credit. But then one thing you can also do is just raise more shares of the company, making the company worth less and diluting the shareholders. So all the shareholders, your actual shares as a shareholder is worth less, but in return, the company gets money so they can use that money to grow their business. So if they're raising money and are actually using the money for things such as sales and marketing, it can be a very good thing. But then some companies raise that money while they're doing stock-based compensation and just paying back themselves and rewarding themselves with that money. So you want to dig deep into a lot of companies. And right here, we can see how do you find how many shares are outstanding? Very good question. For this, I use Stock Unlock again. If you go in the income statement right here, this again is from Microsoft. And this is a very handy website. I use this a ton. Stock Unlock has helped me a lot. And if you click right here, it'll show you all the graphs. So it's very easy to see. And right here, we can find diluted shares outstanding. And if you click right here, we can see a graph with the diluted shares outstanding. So in 2014, they had 8.3 billion shares outstanding. Compared to today, they have $7.4 billion. So how does this make sense? Why do the shares keep going down? It's because they've been doing share buybacks. So it's a simple law of supply and demand. They buy back their own shares so that there's less shares on the market. And if there's less of something, it means it is worth more. So again, if you take HIMS for an example, and we scroll all the way down here and look at the same thing, the diluted shares outstanding, we can see that they have been raising shares. They went from 25 million shares outstanding to 234 million shares outstanding. So why would they do this? Again, because they need cash to survive. They need cash to grow. So companies with less cash that have not as good of a balance sheet, an unhealthy balance sheet, they will have to raise money in some ways, and a lot of companies choose to just dilute their own shares to raise money, which is more common, for example, in times like these where interest rates are high. So if they went to the bank and took a loan, they would have to pay more interest. And then even if you look at it here, we can see one of the stats should be interest paid. That's one of the costs for the companies. But yeah, that is pretty much. Again, one video I saw, a very common phrase is the top line and the bottom line. So the top line is because it is at the very top of the income statement. It would be the revenue. And the bottom line is the net income. So net income, gross margin, gross profit, and revenue are kind of the main things you look at. And then you dive into everything else and why is the net income so low compared to the gross profit and whatnot? Where is the money going to? So if you guys would like a full, there's a lot of different types of investors. If you invest in dividend stocks or growth stocks, you will look at different things and different metrics. So if you guys would like me to do a video on how I fully analyze the stock and what things I look at, what are the green flags and the red flags, comment down below and I will make it. And after this video, I will release a balance sheet, how to read a balance sheet. So stick around and subscribe. Thank you guys very much for watching and have a wonderful day. See ya.